Welcome, everyone. Welcome to the final episode of Season 1 of TAKESTOCK Live. Let's begin by thanking the Calgary Mineral Exploration Group, Calgary MEG, and the Canadian Institute of Mining, Metallurgy and Petroleum for joining us to make Mining Month happen. Thank you to both Calgary's CIM and MEG. Just a little note here that we're off air in July, and we'll be back. Season 2 starts on Wednesday the 5th of August, same time, same place, 15 minutes after market close. We thank the TMX Group and TSX Venture Exchange, our event partner, for helping us keep the conversation between companies and investors going in these very unusual times. We'd also like to recognize the vital support provided by our core sponsors: Fasken, MNP, Lee Jones Gable, Olympia Trust, and the CSE, who helped launch the forum in 2014. Thank you also to our extended network for their support in launching this new initiative. Thank you to the Manitoba, Saskatchewan Prospectors and Developers, to CHF Capital, Sterling Capital, Conduit IR, and many others. Special thank you also goes out to Investmentpitch Media and to the Newswire for helping get the word out. At this point, I would like to turn the mic over to my colleague Mark Francis, our moderator. Take it away, Mark.
Thank you, Raj, and welcome all of you, our attendees and guest presenters. First, note our disclaimer. This presentation is for information only and is not a solicitation to buy or sell stock. Companies pay fees to present at TAKESTOCK, and TAKESTOCK and its principals, Raj Joshi and Mark Francis, may have equity investments in companies we invite to present, may consult to the companies, and make no representation or investment or other recommendation in regards to these presenting or any other companies. You should do due diligence and seek professional investment advice. Some housekeeping matters for attendees. You will note a red Reconnect tab at the top of your screen. If you lose audio, just click it and you will be reconnected. Normally we run just under 45 minutes, but today after the Q&A panel portion, we will allow extra time at the very end for the geologically and technically minded. The chat board will be utilized in this session in particular for this. Please be clear about to whom your question is addressed, and please use the chat board for serious investor and technical questions. Each company will have a presentation with their PowerPoint, followed by a panel discussion with Q&A, moderated by Al Turner of the MEG Forum, and we're delighted to have the ongoing support of the MEG Forum. We encourage you to connect with the companies directly in order to get detailed information. Contact details for the presenters can be found on our website at takestocklive.com. Today, we are really pleased to have back three excellent explorationists. Robert Cameron, CEO of Commander Resources, a geologist with over 35 years of experience, including work with Dome Mines, Placer Dome, Phelps Dodge, and Freeport-McMoran, as well as being a mining analyst for Research Capital. As CEO of Valley High Ventures, he was involved with the discovery of the Cordero silver deposit in Mexico, which was sold for $130 million. We have Darwin Green, CEO and founder of High Gold Mining, who has a long and successful history in mineral exploration in Alaska in particular, having been involved with important deposit discoveries at Constantine's Palmer project and underground exploration development on the Niblack project. For each of those, he was the VP of Exploration. Darwin has a BSc and an MSc in Economic Geology. And of course, we have Matt Turner, CEO of Rockhaven Ventures, a professional geologist who has over 20 years experience in mineral exploration throughout Canada. He became the CEO of Rockhaven Resources in 2008 and has helped oversee the discovery and advancement of Rockhaven's million-ounce Claza gold-silver deposit. I would also point out that on an annual basis, Matt tolerates me on his curling team at Roundup. Much appreciated. So let's start with Rob Cameron, Commander Resources. Rob?
Well, good afternoon, everybody, and welcome to the Take Stock show. And in particular here, thanks for watching the Commander portion of this presentation. It's been about 8 weeks since we last presented, and to be honest, there hasn't been a lot of developments. We haven't embarked on field work yet, and we're still doing our office work compilation and such. But my last presentation focused on our projects and our joint ventures, and I thought I'd take the opportunity here today to focus on some of our other assets, in particular our royalty portfolio, which has become a sort of a common theme and a growing theme in the investment community going forward here. So I'll just move on to the next slide here. We've all seen the corporate disclosure and forward-looking statements. A really crude graphic, but the key thing about Commander is we're a prospect generator. So we operate under that business model, which really involves advancing our projects through joint ventures. So we run a large project portfolio of a number of projects. We find partners for them, and that partner-funded exploration advance them, and hopefully that leads to discovery. And of course, the primary goal is discovery, but we have multiple avenues to get there with our joint venture partners. But along the way, we clip some things from the deals. We get cash in the form of option payments or operator fees. We get shares for option payments as well. So we build an investment portfolio, and almost always we keep a royalty on our projects. And over time, we've built up a royalty portfolio that currently comprises 8 different royalties, and some of them are very significant. And more these royalties are becoming more and more valuable and sought after. There's a growing population of royalty-only companies. I know of 4 that are in the works just right now that are embarking, and their entire goal is to acquire these royalties. So there's a marketplace for them. They're sought after. They're highly valued, and it's sort of something that prospect generators create organically. And I'd like to just introduce you to some of our portfolio of royalties here. Before we go there, just the capital structure, management. There's myself in the middle, and Steve Weathers, my VPX. But we're very tightly held. We only have 35 million shares outstanding, fully diluted 38 million. Our cash position is fairly low, but we're working on topping up that treasury. But our investment portfolio, which I mentioned earlier, is sitting at $1.5 million. So we got about 1.7 million in cash and cash equivalent, with a market cap of only 3.2 million, where I believe we're extremely undervalued. This is our asset map. It's mostly Canada, although we have a single gold project in Mexico. But the red dots are our projects. We're spread across Canada, and we've got 8 ready to look for joint ventures, and we have 3 currently farmed out to joint venture partners. And if time allows, I got one slide at the bottom just to bring everyone up to speed on our joint ventures. But today I'm going to talk about the royalties, and these are the white dots on the map. In particular, I'm going to focus on Hammerdown, which is the most advanced royalty we have in Newfoundland, and then a number of others here. So going into the Hammerdown royalty here, this is a project that Maritime Resources is advancing. It's a former Hammerdown mine in Newfoundland. It was mined by Richmont in 2000 to 2004 when they closed down because gold went below $400 an ounce. Maritime's working on reopening it. They just published a PEA in March, and this slide on the left is their vision for the reopening of the Hammerdown mine, where we have a 2% NSR. They see a combined open pit underground operation with initial ounces of production of around 308,000 ounces, but there's a lot of blue sky potential, which they hope to address with an aggressive exploration program this summer. So 2% NSR on this asset is significant. As is most royalties, they also have a buy down provision, and I've highlighted it on the right hand side here, where they can buy down that royalty to 1% for $1 million cash payment. The reason I highlighted that is that's a potential income source pre-production for Commander on this asset. It's a toll milling operation, so they could get up and running within 18 months, and that is their intent. We could be cash flowing from this royalty as soon as the beginning of 2022. And so we're looking forward to the advancement of that PEA and the feasibility stage, which they have a goal of achieving by the end of this year. So very advanced royalty, imminent cash flow, significant value. I can't do the math for you. I'm not allowed, but you could sort of rough out what a 1% royalty with $1 million buy down on 308,000 ounces of gold looks like in terms of value with a simple arithmetic. The next royalty I'd like to highlight is another one we have, which is a imminent production. And this is one at the Mount Poly mine in central British Columbia. This is a 22,000 ton per day copper gold mine run by Imperial Metals. It's currently shuttered while they wait for improving copper prices. But we have a small parcel of land there called what we call the Boundary Zone royalty property. We sold this to them a number of years ago, and it shares the boundary zone. So the red parcel here is our royalty grounds. You can see the proposed open pit here, which straddles the Clum and Claim boundary. And they have a mine schedule that I'm not sure the current status of it, but it was going to go through the mill in 2026. This royalty is a little different. It's $2.50 for every ton that goes to the mill for the first 400,000 tons, and then it drops to $1.25 per ton afterwards. Keep in mind, there's a 22,000 ton per day mill. This is a small resource, but should it grow, it could fill that mill perhaps. On the left-hand side, you can see the value of the royalty. Our royalty ground is on the left-hand side. You can see all the mine site exploration accomplished by Imperial Metals on the right-hand side. And those ore polygons stop right at the royalty claim boundary. Just reflects there has been no serious deep exploration on our royalty grounds. And we look forward to seeing some future developments there. We also have a separate royalty, separate option agreement on surrounding lands, which will probably be rolled into a similar type royalty arrangement here with Imperial. So two imminent cash flowing ones. The next one is Destiny Gold Project with Alto Ventures. It's a resource that's 10 million tons of 1 gram per ton for 364,000 ounces and a further 247 in the inferred category. And we have a 2% royalty on this asset as well. They're just cashed up and they're going to be exploring aggressively on that this summer. And a large regional gold project in Newfoundland, in Baffin Island. This is a 4,000 square kilometer mineral belt where we have a 0.25 to 0.5% NSR. It's equivalent to very similar to what is being mined elsewhere in the Northwest Territories and Nunavut.
Thank you, Rob.
Okay.
Sorry, we're there. We're past the time.
Oh, I got the hook. Okay.
You've got the hook. Thank you very much, Rob, and we'll see you in the panel discussion.
Okay.
And now, Darwin Green, High Gold.
Thanks, Mark, and thanks to everyone listening in. Going to talk to you about high grade gold in North America. That's what we're about, and that's why we're called high gold mining. Forward-looking statements. So 2 months ago, gave our first presentation here, and we just come out with our resource that day, so I didn't have a chance to really talk about it. So I'll spend a little bit of time today talking about that and how we plan to grow it. We as a company, we're fairly new. We were formed and listed in September of 2019, formed around high-grade gold assets in North America. We've got 3 projects in Ontario and a more advanced project in Alaska, a very accessible part of Southeast Alaska or South Central Alaska, and that's what I'll be talking to you about. Quick sort of summary of, I guess, some of the attractive features or what I look for when investing. You know, we've got a tight share structure with just 41 million shares issued and outstanding. We've got a roster of shareholders that include blue chip institutions, a senior gold producer, and some very well-known names in the mining space. We do have cash to execute what we want to do. We've got about 11 million Canadian right now. You know, we're made up of a hardworking management team focused, you know, with a nice balance of technical expertise and capital market strength. We've got an asset that's produced some of the best or better drill intersections of 2019, and we think there's a lot of upside value to us. So focusing in on Johnson, the resource, so this is brand new or whatever, 2 months old now, fairly new. It's 750,000 ounces gold equivalent at 10.9 grams per ton gold equivalent in the indicated category, and an additional 134,000 ounces gold equivalent at 7.2 grams per ton in the inferred category. So a total endowment knocking on the door of 900,000 ounces gold equivalent. And it's very meaningful, and I'll talk to you what sort of, I guess, separates, or I think helps separate us from a lot of other sub-million ounce systems in a moment. As far as the project goes, it was dormant for 25 years. It got put to bed, not because it had any fatal flaw. There were some circumstantial things that led to it getting kind of shelved. And really, there's exceptional exploration upside, and it's missed the last 2 or 3 major gold cycles, and we're the beneficiaries of that, being able to walk in and start exploring now. As far as what it is, it's a bit of an unusual beast. You know, it's been variably described as a VMS or an epithermal. we've scoured the literature, and the closest analog we've been able to find is Hod Maden. It's a deposit that Sandstorm, a royalty company, owns 30% of in Turkey. Similar geology, similar shape, similar geometry. Happens to be a bit larger, about 3 times larger, but it is the prize what we're looking for. So we feel we've got, you know, our hooks into something that could ultimately look like a Hod Maden, which has very special economics. One of these few projects that has $1 billion plus NPV, plus better than 50% IRR. And it's there because of its geometry and width. It's that rare combination of very high grades with exceptional thickness. And so what we see in our resource, and why it's so meaningful in being able to communicate our story, is that it's all well and good to have grade, but in the mining business, it's all about margins. So if you can have that grade and marry it with exceptional width and steep geometry, that means very low cost mining. That means high margin, and that's what we are focused on. We are very much now focused on making it larger, however, and not looking at the economics of what we have. We may be able to come back to what we have if we don't have any success, but we expect to have a fair amount of success as we go forwards. And so this is just a cross section looking at the deposit. You get a sense of the grade. It appears to increase in both grade and width as you go deeper. Some of the deepest intersections, up to 70 meters of 27 grams gold equivalent, 107 meters of almost 20 grams gold equivalent. Really exceptional stuff. And then it gets cut off by a fault. It's a post-mineral fault. It's on that east side or right side of that image, and it's displaced the ore deposit. Fortunately, we know where it is, or we think we know where it is, because the past workers that worked this actually came up with this model, and they did the heavy lifting of drilling out until they found it. Unfortunately, they shut down just as they picked it up. They hit intersections that were, they hit the same type of mineralogy, same type of mineralization, but only in 3 or 4 holes that kind of got into that space. They're widely spaced. And so that's our first #1 target to go chasing and to expand the system and the deposit. But by no means is it the only target. And so just to clarify, the JT deposit on the left here, that is what's been defined to date. That northeast offset target, there's a handful of holes that have kind of vectored us into the space to now go follow up and hopefully vector into the core of the system and being able to chase it to depth. This is just a plan view looking at the geology around the deposit. So the deposit area sits right where that #3 is. That's what's been defined to date. There is room to expand that. We will be drilling that. We're mobilizing right now into the field to be starting up early July, and we plan to be testing all 5 of these targets with 2 drill rigs. #1 being that offset target. #3 is expansion of the main deposit. #4 is a brand new footwall zone we discovered last year when we were basically mostly just focused on getting information to generate a resource. And #2 is another good quality target. And I see Mark showing up, so I better boogie. So the simple business thesis is this. We think we have our hooks into what we would consider the ideal mineral deposit. It's high grade, it's thick, it should have attractive economics. We're focused on finding more of it. It also has a small footprint, it's underground, it's Alaska Native Corp have an interest in it. Our sole focus in the near to midterm is expanding the size of that resource base. Thanks so much.
Very good. Thank you very much, Darwin. And now, Matt Turner, Rockhaven, on with you.
Great. Thanks, Mark. Thanks, Raj, for the invitation to present again. Thanks to you all for tuning in. I think we're coming into a real critical moment here now in advancing our flagship Glasgow Gold Silver project with updated economics out shortly, and then that will most likely lead into our decision to take this through pre-feasibility and permitting stages, and those will be on the horizon. So I think for any potential new shareholder coming into the space or looking at possible investment opportunities into the junior gold sector, Rockhaven's a really good look, especially considering we haven't really had been part of this recent run in the juniors. So we're sitting at about $20 to $25 million market cap with a pretty special deposit on our hands. Okay, so that's our forward-looking statement slide. As Mark mentioned off the top there, please do your own due diligence. Okay, first off, I just wanted to quickly talk about the team at Rockhaven. So with the management and directors, as you can see listed there, between those and our consulting firm that we're associated with, Archer Catherine Associates. They've worked in the Yukon now for about 53 years. So they, between them and us, we know it better than anyone, and lots of success, obviously, through that time. On the capital structure, we're sitting at 187 million shares out, 230 fully diluted, market cap of about $24 million, and working cap just over $2 million. Also, the shareholders of Rockhaven, we've got, I guess, quite a unique share structure in that regard. We're sitting at about 60% held by essentially 4 groups: Strategic Metals Insiders, Core Mining's in there at about 8%, and Sprott as well. The project itself is very favorably located. We're only about a 3.25-hour drive from the capital city of Whitehorse. It's in the Dawson Gold Belt, right, kind of in the southeast corner, where most of the action lately over the last few years has been looking at or revolved around the white gold and coffee deposits. But there's some big porphyry deposits in the belt as well. The Casino deposit, the Minto deposit that's being mined right now by Pembridge, and then Free Gold Mountain is only about 25 kilometers to the north of us. We've actually got a porphyry that drives our mineralization as well, but we're really focused on the epithermal, the more distal portion of the system, and that's all of our resources are in that in the epithermal space on the property, and that's, I think, why we managed to get such a nice high-grade deposit. Right now it sits as one of the highest grade plus 1 million ounce gold deposits ever discovered in the history of the Yukon. Some really spectacular rock samples coming out up here. Multi-phase, big strike lengths, big down dip potential, and that's the reason why we've got a resource as we have. I've also put a link here for any of the rock hounds. We've got a virtual, I think we're one of the only companies that do this, but we've got a virtual core shack with about 40 intercepts from about 40 holes. Some of those 40 holes are shown in this picture. That's core stacks from about the total of the 467 holes drilled thus far by Rockhaven since 2010. So lots of drilling, over 100,000 meters, lots of trenching as well. That's allowed us to identify the zones and confirm their continuity. A really nice resource, which I'll get into on the next slide. We put out a positive PEA in 2016, but that was at much lower gold prices, and we've done about 25,000 meters or so of drilling since then, made the deposit better, and again, the metal prices have improved. We've done a lot of both met and permitting work. The mineral resources are unencumbered, which is very important and quite rare in this day and age, and we've got a large land package to explore. So the resources, I won't dwell too much. There's a big table, obviously, but I will point out we're sitting at about 1.62 million ounces gold equivalent at about 5 grams per ton gold equivalent, and about 60% of those resources are in the higher confidence indicated resources category. The way it looks in the block model, you can get a sense of really nice continuity with the zones. Also, you get a sense of the grade profile and the zonation as we progress out more towards the northwest part of the system, and that'd be more in the distal part of the system. The grades increase. Also shown on here are some of the deeper intercepts. Some are fantastic, 11 grams over 6.7 meters. Meter and a half of half an ounce gold and 40 ounces silver. So what's really showing is that the system is not letting up at depth, and we're only down about, on average, about 400 meters below surface here. And I think that kind of feeds into our potential deposit analog here, where it's more akin to a kind of a special type of epithermal style mineralization that's not as dependent on pressure and temperature as most are. And one of the potential analogs is the Buritica deposit that was sold by Continental to Zijin Mining for $1.4 billion last year. So, and one of the special things with Buritica was and the fact that I think they got to about 7 million ounces was the fact that the mineralization extended down over 1,500 meters. Okay, so what are we doing this year? I'll just highlight really one target in particular, and that's the rust zone. kind of near the top of the map you see here is the Claza resource area. The Rusk zone sits about 3 kilometers to the south. It is one of the largest and highest arsenic in soil anomalies that we've actually seen as a company, and it's been completely untested by drilling. So that's something that we've identified over the last couple of years and built that target up. That's the way it looks. I think one of the most important things about this slide is right below it is one of the, well, it's actually by far the best placer operation in the entire district, and that basically starts right below that big anomaly. So near-term catalysts, field crews are on site now. We plan to get drilling in August of this year, and then of course it'll be mainly discovery focused, and then finally updated PEA due out soon. So stay tuned. Thank you very much.
Thank you, Matt. Now we will bring all of our panelists and bring on Al Turner, professional geologist with Stantec and current chair, president of the Calgary Mineral Exploration Group, a long-standing supporter of TAKESTOCK, to be our moderator for the panel Q&A portion. Thank you for joining us today, Al.
My pleasure, Mark. Thank you. Okay, I have quite a few questions here, so I think I'll just jump right into them instead of starting with a general question. I hope you don't mind. So first of all, Matt, you just completed your presentation, so I'm going to start firing some questions at you. Now, you mentioned that, I guess one of the questions here is, how does the mineralization at Claza compare to the old nearby mines, such as Mount Nissan mine, and why do you think this potential wasn't identified before?
Yeah, it's the Mount Nansen mine. It's only about 8 kilometers away. And funny enough, this is going back to the 1930s. That's when mineralization was hard rock mineralization was first identified in the belt. And that was actually right on the top of the Claza Hill. A few years later, they discovered the mineralization 8K away where now the Mount Nansen mine sits. And really, since the late 30s through till the 80s, all the focus was down on that part of the belt. Really high grade mineralization, but different host rocks. And so they were never really able to get the resources up above, say, 250,000 ounces. Different host rocks on our part of the belt, which is basically the mirror image or the same distance away from the mineralizing porphyry that sits between us. And basically, they took another look back in the 80s at Claza, but they were in kind of the lower grade portion of the system, too close to the heat source. And so we were fortunate enough when we got on site, we got pretty aggressive with our step out drilling, and that's how we found the more distal and high grade mineralization. So they were close, but they just didn't get. They probably were really about a kilometer away.
Great. Okay, thanks, Matt.
Mm-hmm.
Rob, I'm going to move onto you. Now, there's been some news recently in the market about mergers in royalty companies, such as Evrim and the Renaissance merger that was announced on June 10th. How does this sort of news impact Commander? Is there being an uptick in interest, or what's happened?
Yes, definitely. I mean, Evrim and Renaissance are both premier prospect generators, and they put themselves together to create a bigger prospect generator, but they're also combining their accumulated royalty package. So they're going to rebrand themselves as sort of a royalty company with a prospect generator business. So they'll generate their organic generation of royalties and then add that to their existing royalty pile. So this is a theme that started emerging late last year. Well, it's been going on for a while, but it really accelerated into the new year. And I'd say most of our calls are people looking for purchasing royalties and looking at what are we going to do with our royalties. And it's really driving the interest in Commander right now. And I think that's a theme across all companies. If you got a royalty, you're going to be hit on for it. As I mentioned in my talk, I know of at least 4 brand new royalty companies coming out. There'll be a lot of competitors out there looking for royalties. So there's quite a growing marketplace for these things. And of course, we all know the giant royalty companies are the success stories that everyone points to and hopes to achieve something in that regard. But I think the prospect generators are the best suited to that, because as the royalty pool shrinks, it's the organic creation of royalties through joint ventures and discoveries that are where the new ones are going to come from. And you can kind of control your destiny a little better that way. Of course, the big cash flowing ones are always going to be rare and pricey and be a lot of competition for them.
Excellent. Thanks, Rob. Darwin, moving on to you. So volcanogenic massive sulfide deposit, VMS deposits, have had a bit of a black eye in sensitive environments, and we've seen this kind of historical case studies with Tulsa Chief in Northwest BC. So kind of on that note then, what sort of baseline environmental studies have been done or are being planned on your site to develop an understanding of how best to mine the deposits to cause the least environmental impact?
Yeah, no, good question. I think it's important to point out that the vast majority of sort of the baggage that comes with VMS from a acid rock drainage perspective are from mines that were developed prior to kind of knowledge of ARD for the most part, and something like Tulsa Chief in the 50s and 60s, and so modern mining in VMS mines can absolutely be developed to manage that. It's about knowing it up front versus trying to deal with the problem after the fact. But when it comes to, it's one of the real interesting pieces about Johnson. It was basically, you can go back to papers in the 80s when it was first discovered, and it was being described as a kind of a feeder to a VMS system. There is no classic massive sulfide there, and in fact, it's relatively low sulfide system, even despite the base metal grades we have. Certainly low in pyrite, and just by example, that resource we have, the SG, average SG out of 600 samples is 2.84, which is, like you think of that of a normal gold vein system, and that's really what it is. It's more of a stockwork vein system that has pods and breccias with heavy sulfides associated with it. All of that said, we will be laying out more environmental programs just as part and parcel of the exploration. It's just what you do nowadays. We're still just getting ourselves up on step, but that would include water quality sampling and ARD type studies on the rock, acid-based counting type studies.
Excellent. Thanks, Darwin. Matt, another one for you here. In portions of your project area, excuse me. There we go. Sorry. In portions of your project area, such as the Victoria Zone, I know you didn't show this slide in your current presentation on that, but I did see one of your corporate ones, and it seemed like the trenching, quite extensive trenching, but it also was very effective due to the amount of cover. I guess one question is, in the Yukon, again, what sort of permitting do you have to get for that kind of ground disturbance, and is trenching going to be utilized a fair amount more in conjunction with the drilling?
Yeah, it's a good question. Like, I think for us, I'd almost have to say we've earned our surface disturbance, because we've first off, we started cleaning up the old site when we got on, or the work from the 80s when we got on site initially in 2010, and so that included basically cleaning up the old trenches, filling them all in, bringing as much soil as we could over top, so vegetation could grow again, and getting all the garbage out, and then rolling reclamation on the work that we've done so far. So I think all stakeholders in the area are quite impressed with the work we've done, and the trenching has been incredibly important for us, because we're dealing with only about a meter of overburden over top of the bedrock, and so, like, let's say, for example, in 2013, we did, I think we did about 10,000 meters of trenching that year, but a lot of them were short trenches. They were about 20 meters long, but we were tracing following the trace of the zones and confirming the continuity. So it's amazing when you can stand at the top of the hill and look down for, in some cases, 1.5 kilometers and just see the altered pile of limonite and scordite, just basically along a knife's edge, right? So you really get a sense of continuity, and that was a big, I think, game changer for me. And it's held true as we explored down dip through drilling too. So that's the beautiful thing, especially the fact that Claas is in a developed area with the old mine and all the placer operations. I think it gives you a little bit more leeway to do that development work.
Okay, great, thank you, Matt. Rob, gonna jump back over to the project generation sort of questions that you're bringing up on the model, and it's, as you mentioned, of course, royalties are very sought after. But I guess another model I've seen as well is to obtain payments early on them. Does Commander implement advanced royalty payments to generate additional cash flow in addition to the option payments?
We always try when we're negotiating the deal, but I mean, that is often a very a stumbling block for a lot of people, and rightly so. You know, early stage, they can't really commit to advanced royalty payments until they know what the discovery is going to look like. So it's always in their wish list, but it's rarely achieved in the early stage deals. But that said, we do have advanced royalty payments from one of our projects called Tam Misty. It's only $25,000 a year, but it's better than nothing. And that's from Teck Resources on a project we have in northern BC. Yeah, I would love to get more advanced royalties, but it's a really tough one to negotiate.
That makes sense. Thank you. Darwin, a few questions have come as well from the chat line here. And I guess first one is, when are the drills going to start turning?
yeah, we should have news out on that soon, but we've got a crew up there already on site, opening up camp right now. We expect barges to be mobilizing the drill across Cook Inlet here right at the end of the month, and so we should have 2 drills turning beginning of July. July 1 is the target. Hopefully the weather cooperates and that'll happen.
Okay. Another quick one here. What has HighGold done to advance community engagement, social relationships at this point in the project? Yeah,
another good question. You know, I think it's an important question for all projects, but I think Alaska in particular has a heightened sense of perception. You know, for me personally, I've got a lot of history in Alaska, but most of that history was in Southeast Alaska, developing the relationships and the contacts there. But it certainly was an area to, I guess, gain experience with community engagement, where you've got a project that's very close to a community in that particular instance. We've got a fairly unique situation in that the land we're developing and the mineral lease we have is within Alaska Native Corporation. So Alaska settled its indigenous land claims in the 70s, and they created 12 for-profit regional corporations, and with the shareholders being the indigenous people within that surrounding region. That's who they own the mineral rights, and they will be getting the royalty revenue from this project. And what's extra neat about it is there's a sharing provision, so that regional corp has to share resource revenues with all the other regional corps and all the local village corporations. And so Siri is doing a lot of that community engagement, the Native Corp that we are leasing the property from, for any of the surrounding villages within our immediate region. They're doing some of that early work. We ourselves are doing a lot of the sort of mapping out of who the stakeholders are right now and advising people of the work that we're doing. And all of these things, they're all scaled to where you're at in a project, and that will continue to build with time.
Okay, thanks, Darwin. Matt, another one on the Claza property. The metallurgical work, you briefly actually mentioned it in your presentation, and in the previous technical report, it was really identified as an important area to continue to advance. What work has been completed to optimize gold recovery?
Yeah, it's a good question. Like already, you know, gold recovery in the current flow sheet is quite good. It's about 94%. But I think it's probably more of a focus on how to minimize the processing costs and increase the efficiencies through either direct shipment of concentrates. So that's, you know, on-site processing. Yeah, I guess really less on-site processing, and therefore bring down the capital costs. And I think that's going to be a real focus going into the pre-fees. That'll be one of the main focuses on that front as we move into it.
Excellent. Okay, thanks, Matt. So kind of at this point, we're at about 2:55 or so, and I think I'd like to dive into more of the technical questions. I find that area quite interesting as well. So for people who are tuned in that aren't interested in the technical, this might be a time to get off, but on the other side, this is when it gets really interesting as well. So hang in there if you can. So Darwin, starting with you, in your presentation, the JT deposit is compared to Hod Maden in Eastern Turkey, and I got a chance to visit it a few years ago, and it truly is spectacular, as you're mentioning. And it appears to be this VHS sorry, VMS overprinted by an epithermal system. Has at least qualities of both of them. And you compared the Hod Maden to the JT deposit in your presentation. And then I guess I'm wondering, other than tonnage, what are some of the differences between your deposit and Hod Maden?
Yeah, no, good question. Yeah, it is. I mean, they both are a bit weird there. They're a bit like deposit fluid. Let's call it that way. They don't know what they are. There's but some of the similarities, you know, they're sort of andesite, dacite host. They're both in submarine volcanic rocks. They both have elements that do speak to VMS in terms of the anhydrite alteration, in terms of the metal assemblage. You know, both have very similar kind of geometries. You know, some of the differences, I would say, you know, certainly Hod Maden right now has more copper in the system. It's more of a gold copper system. The zinc is more flanking on that deposit. It is there, but it's, you know, there's less zinc in the resource. We have copper, but certainly not the same grades. What we are seeing is our copper grades are increasing with depth. And one of the things I think might be going on is feels like we've preserved the whole thing. It's just barely breached surface where it's exposed, and we may be getting deeper into the more copper-rich part. That's the hopeful thinking. You know, I guess that's kind of the main differences right now. I mean, there's going to be other little differences. It has more jasper in their system. We have some jasper. The anhydrite, which is a really unique feature of Johnson, it's sort of a nodular replacement texture that suggests, you know, rather than being vein-like, being replacement texture, you almost think that it would be submarine environment where that's happening. But we think it's a porous, permeable host that's received that. And it makes up 20 to 80% of the rock mass. And that sort of surrounds it almost in a concentric zone around the deposit at Johnson, whereas at Hod Maden, they have anhydrite, but it's more in the footwall. It's a deeper part of the system there.
Okay, great. Thanks, Darwin. Rob, moving on to Commander's first Loon Gold project in Ontario. Now it's in the Pickle Lake Greenstone Belt, which commonly is hosted by iron formations that have undergone faulting and folding. Are there historic workings on your land package? And what exploration targets is Commander focusing on in that area?
Yeah, this is a project we just sort of staked on first principles in March, so we haven't set foot on it, but it's sort of a parallel belt of rocks to the main belt that hosts the mines at Pickle Crow and Patricia, and they're hosted in what's the Pickle Crow assemblage. We're across a major structure in what's probably equivalent to the Confederation Group, and as we all know, the Confederation Group is kind of the key host rocks over in the Red Lake camp about 200 kilometers to the west. So it's probably the world's largest swamp. There is not a lot of showings on this property. That's why it's underexplored. It does have an iron formation through the middle of the package as evidence from government mag and EM. And we're going to focus on initially the iron formation hosted angle, but you know, orogenic gold doesn't require that. That's just the easy target because you can see it with mag. But you know, the larger shear systems and through going deformation zones don't require an iron formation. So we're going to look at all aspects. So job one is to fly an airborne mag EM system and really pin down the attributes of the geology indirectly with that process, and then we'll focus in on what looks like good structural zones, and maybe hopefully find some outcrop. If not, we'll do some deep soil geochemistry type surveys.
Right on. Okay, thanks, Rob. Another one from the audience. This one's again for Darwin. What was the depth of the fault offset mineralization zone that you discussed?
Yeah, so you know, it's kind of coming in slightly oblique to the deposit, and you know, we traced the main deposit from surface down about to a maximum depth about 275 meters below surface. It's been slid to the north about 600-700 meters, but topography actually climbs as you go in that direction. So, well, it should in theory the top of it be about 300 meters below surface. You've probably gained another 100 meters in elevation that direction, or 50 to 100 meters. So we'll be looking at 400, 500 meter long holes to be testing that. You know, and those were more expensive in the early 90s when they were exploring this, and that was partly what I think what led to them stopping their exploration at that time. Yeah, that's where it sits right now.
Okay, thanks, Darwin. Actually, that feeds into one of the questions I had for you as well. The area you mentioned that was offset, I think you're mentioning, bringing it up to this, the northeast offset target. And it was mentioned, I believe, in your technical report that this is a high priority zone for further delineation. And historically, it seems that there's been about 9 holes that were successfully drilled in that area. Over what extent were these holes drilled, and I guess what have you already determined the potential for this area is, and are you going to be drilling it in 2020?
Yeah, it's absolutely. I mean, it's probably our top target. By no means our only target. It's certainly a compelling one. If you think the deposit should keep going, if you can find where it picks up, is an attractive target. You know, of those 9 holes that were completed, it's great to see somebody actually reading the technical reports. You know, there's a lot of work that goes into those, and it's great to see it. You know, there was some challenge getting through some overburden in the part that we're drilling. We're looking at collaring in a slightly different spot. Of those holes, as the fault goes that way, as we get more detail on it, it does splay a little bit there. And so the ones that actually got into the right side of the structure in the right place, we see about 4 holes in that area. And they all went through the anhydrite alteration into silicification and had gold. You know, nothing quite like what we saw on the other side. It was sort of 1 to 2 grams over 10 or 12 meters. And one hole was 11 grams over 3 meters, but it was that diagnostic signature of the anhydrite into the silicification and mineralization. But that was, you know, those are probably along maybe a 250 meter length where those holes were. When you think the heart of our deposit, most of it actually slots up and under 100 meters. You know, that's what's been there, and we feel very much that they've done all the hard work to get you into the location. Now we just need to fine tune it and pick up the core of the system, which is a bit pipe-like. The big question though is how far it goes. We don't know, and only drilling's going to find that out.
Thanks, Darwin. Rob, I wanted to ask you about the Flume property up in the Yukon, and it mentioned I was. In one of your presentations, I was looking at, you'd mentioned there's been quite a bit of historical work. I think it was about $3.5 million was spent in delineating it previously. And then there was an additional drill program in 2012 that returned some nice assays, 2 meters over, I guess 5.7 grams gold over 2 meters. I guess a couple questions about this. This is are we dealing with a mesothermal vein hosted style system here? And what is Commander's plans in 2020? Are you going into this area to do any more work?
Yeah, the Flume, it's in the white gold district, so it's a classic white gold target. I think it most resembles tectonically and structurally the Coffee project. So it's a vast fault array, which you can see in the detailed geophysics, and even the geochemistry, which is tightly spaced, can also measure these structures as well. So it's a fault array, and that's what was encountered in some of that drilling from 2012, which tested just one part of the large anomaly. So it is an orogenic gold system. It's hosted in metasediments, and it's very similar to the other white gold type deposits. It's about a 10-kilometer long gold arsenic soil anomaly with the structures visible in the mag underneath it, and there's no outcrop, so it's a challenge to explore. We consider this project to really be advanced far enough that we need to find a partner to go forward on it. It needs drilling and trenching going onwards. Access isn't that bad since there's an active placer operation on the north end of the project that's currently mining gold. So there's road access to most of the property once you get there. You have to barge up the river to get the equipment in. So we're looking for a partner. And we share the anomaly with 2 others. Bernie Kreft has a parcel of land, and White Gold has another parcel of land. So you put the 3 pieces of that target together, it's really it's about an 18-kilometer by 10-kilometer target, one of the larger ones in the White Gold district. It really needs some consolidation, but nonetheless, ours is looking for a partner.
Okay, thanks, Rob. Matt, I've got a question for you now, and it actually ties into what Rob was just mentioning. He was talking a little bit about the arsenic, so I thought I'd kind of put you on the hot seat about that. So with the high arsenic in the soil and the identified association arsenopyrite, what specific environmental studies have been completed, and how does this affect optimization of ore recovery?
Yeah, well, this definitely comes back, first off, I guess, to the metallurgy, where the work we've done indicates that 58% of the gold is in the arsenopyrite. So I guess there's 2 ways to go about this, whether you make a high-grade arsenopyrite concentrate to ship out, or process it on site through a POX circuit. We've actually done trade-off studies on this, and it's a clear winner on the POX because it's such a low mass pull, about 12% mass pull to the arsenopyrite con. So, you know, and when you run it through the POX, you get enough pyrite in it to produce scorodite as a stable end member. So, you know, the way all the test work's indicating that you know, it's going to be a good stable product at the end of the day. And then I guess, you know, the last note on the arsenic, because it's such a great exploration tool to look at the arsenics in the soils. It's so mobile that you look at that the big arsenic anomaly to the south, the one I mentioned at the Rusk. You know, there's some nice gold popping up with that, but you're probably in you know, deeper overburden. You know, definitely deeper than the meter that we get on the Claza Hill. So so yeah, it might be a kind of a bit of a savior for us for being able to identify that target. So
great, thanks, Matt. There's another question that came out from the chat line here. What is the estimated overburden depth at Rusk?
It's a hard one because we've never drilled down there. If I was to bet, I'd say between 4 to 10 meters is what I bet. So
all right,
it shouldn't be too hard.
Okay, thanks. Rob, another question for you, and I'll premise this by saying there's about 3 parts to this question, so I'll line it up pretty carefully here when we go through it. Now, this is kind of going over to the Pedro Gold project that you were mentioning in Durango, Mexico, and it was identified by Commander as an epithermal style that hosts gold in silicified breccias in conglomerate. So the recent work that was completed by Commander identified by IP Geophysics potential feeder zone to this surface breccias, which, following Hedenquist's what he's been putting forward in the models lately, is pretty critical to identify that. So I guess one of the questions was, Newmont did a whole bunch of drilling on this area before, some drilling on this area before. Did they intersect this area that you've identified as this potential feeder zone, or does it still remain untested?
Partially. They saw the same thing we did. They didn't have the deep looking geophysics to sort of model the third dimension. So what you see on surface looks like a stratabound zone of silicification on the base of the conglomerate sitting over the Caracal Formation. Newmont was model driven, and they were exploring for Carlin deposits specifically. They discounted all the surface expression and the epithermal structures and felt that it was the upper levels of a Carlin system, and the Caracal Formation just underneath is the exact mirror of the Roberts Mountain Formation. And they were exploring specifically for Carlin deposits. So they drilled vertical holes that went 200 to 300 meters deep into the Caracal Formation to test the Caracal. Whereas our modeling and our geophysics show that a lot of these feeder structures are vertical, so they wouldn't have intersected with them. So they got some good gold, 0.5 gram over 10 meters in the stratabounds mineralization, that contact. But they didn't test the verters.
Okay, you're breaking up a little bit, at least on my side. Just wondering then, I guess the question on silver-gold ratios associated with the mineralization, or what are you kind of looking at?
There's absolutely no silver in the mineralization so far. It's just pure gold, which is unusual, seeing as we're in a silver camp. That's why we're there in the first place when we found this thing. But it's 100% gold.
Okay, and then do you see any evidence? Again, because of the way it's being deposited into the conglomerates, you may not. But do you see any evidence of boiling textures association to kind of give you a feel for where you are in the epithermal system?
Not necessarily boiling textures. We do see lots of banded chalcedony and such, so that we're almost a sinter-like surface expressions. We haven't seen replacement textures or boiling textures per se. The silicified breccias, though, are definitely hydrothermal and fairly violent looking, with ripped up sharp shards of silica and milled wall rock. So I think there is a lot of boiling just below us, but we don't see direct evidence of that in terms of textures.
Okay, thanks, Rob. Matt, question for you. Now, you got into it a little bit in your presentation about looking at the deposit style, and your previous technical report was mentioning the carbonate, basically a carbonate base metal CBM sort of deposit style. And in the presentation you just gave us, you drew parallels to the Bernica deposit in Colombia. Can you elaborate a little bit more on the similarities that you see to the deposit?
Yeah, funny, and I'll try to make this as quick as possible, but there's an interesting backstory on that. So it was Vic Wall from Continental who actually kind of raised it to our attention that the mineralization at Claza was similar to Buritica, and this was in 2012, before we had really stepped down too deep. I think we were only a couple hundred meters below surface at that point, and so he saw the similarities, and then within 2 years after that, we drilled down to basically where we're at now, almost 500 meters, and still hitting nice high-grade numbers. So he was right with the similarities, but it was interesting because we brought Jeremy Richards on as a technical advisor, and Jeremy and Vic were kind of butting heads about what Buritica really was, if it truly was a CBM. And so there's a backstory there that, again, you know, it's interesting to really know. But at the end of the day, Jeremy really looked at both of them as being multi-phase, almost kind of telescoping mineralization, and that was the biggest kind of takeaway. But you know, in really looking at the CO2 and the mineralizing fluids, he didn't really see in his petrography work any of those in either deposit. So that was just kind of a neat backstory on that front, because a lot of your listeners here definitely know Jeremy Richards just with his association with the U of A. So.
Exactly. Okay. Thank you. Appreciate that, Matt.
Yeah.
Okay, Darwin, this is the last question, and then I'm going to turn it back over to Mark here. So you get the concluding words, but I guess you mentioned in the technical report mentioned again that there was several rounds of metallurgical testing that was kind of completed between the 1980s and the mid-1990s. Of course, before the project went on hiatus for a while, but you meant I guess it was identified that HighGold plans to complete more testing. What processes are you planning on testing and advancing that will enhance the historical understanding on the metallurgy?
Yeah. Well, I guess first off, I mean, what that initial work did is it kind of helped just show that it looks like it'll be conventional metallurgy, you know, moderate grind sizes and good, decent recoveries with, you know, copper con and zinc con, and most of the gold reports to that copper con. You know, with everything, I think it would benefit from additional work. You know, depending on which study you looked at, you know, you could get a little bit of zinc going into the copper or no copper. You know, looking at, you know, it's always a little bit of a trade-off, or you got to play a little bit more with the different reagents to either suppress the zinc so it doesn't float with the copper. Similarly, the lead, you know, do you pull it out of the copper or not? We've put it out there that we think we would like to do more. It's probably going to be, we're probably going to now wait a little bit before we really do that, because you're going to want to tie it to where's the rest of the deposit going and take more of a bigger geometallurgical look at it. We've got this new footwall zone. Is it going to respond the same way as the main zone? So step one for us is really continue expanding the deposit, and then having someone with a metallurgical eye have a harder look at it versus us geologists trying to dictate the show with the metallurgy.
Okay. Excellent. Thanks, Darwin. Okay, I'm going to turn it back. So I'm done my questions.
Thank you very much, Al Turner. Great job moderating. Thank you to our presenters as well. We wish all of you a successful exploration and field season this summer, and we hope to have you back in the autumn. So thank you to Al Turner, our moderator, Rob Cameron, CEO of Commander Resources, CMD, Darwin Green, CEO of HighGold Mining, HIGH, and Matt Turner, CEO, Rockhaven Ventures, RK. And to you, our attendees, thank you again for your time today and throughout our first season. Do go to the company websites and CDAR, learn more about these companies, and check in at takestocklive.com. Until August 5th, amidst your summer fun, keep doing your homework, be determined in your due diligence, and ask tough questions. We'll be back August 5th. This is Mark and Raj signing out from Take Stock Live.
Thanks, guys.
Thanks,
Thank
guys.
you all.
Thank you.
And to the audience, see you back in August. All the best.
I know.